Karen, guess who was downstairs at Starbucks? Peter Churchouse from Fort Wood Capito, so we decided to yank him into the studio since we're talking about his forte. Hello, sir.
Good morning, Bernie. Sorry, I'm late.
Fred over there, Fred from HSBC, who's visiting Singapore, doesn't think that this boom in property is over. I was throwing this, the latest figures from the Hong Kong Monetary Authority on a reduction in the drawdown in mortgage money as evidence that maybe things are, are simmering rather than boiling right now.
Oh, absolutely. I think we are seeing the pace of property lending starting to slow down. We're certainly seeing transactions slow down quite sharply over the last couple of months. And we're also starting to see the pace of price increases slowing down. The first quarter of the year, we saw prices up every quarter about 3.5%, 3.3. May and April, that was slowing down to about 1.2, 1.3%. So it's still up, but the pace of increase is slowing quite sharply. So I wouldn't be surprised to see it in flat or negative territory by the end of the third quarter.
Is this going to trend? Do you think this is going to put pay? Do you think this is going to halt any, public housing initiatives like resumption of the HO? You've got property tycoons, saying, hey, we should build more HOS flats. The fact is, a one-bedroom or a studio, 400-square-foot studio that used to go for $1,000 US a month a couple of years ago is going for $1,500 a month. I mean, no matter what strata of society you're looking at, it's pretty obscene in many cases.
No, I think that's right. I think the government will continue with its public home ownership scheme, and I wouldn't be surprised to see even more public rental housing built. I think they could even resurrect the thing called the PSPS scheme, which is a private sector participation scheme.
No.
Actually, that scheme was actually very good, except it wasn't executed very well. If they control the execution a bit better, I think that would be a very, very good weapon in the fight against low-cost housing here.
Okay. So, Peter, let me bring in the other Hong Kong resident, Fred Newman, from the SGX.
Peter, you mentioned that the housing market has shown signs of slowing in Hong Kong, but one thing that still lurks in the background is I think that we have very low interest rates, that there's no sign of the Federal Reserve hiking interest rates anytime soon. In fact, the talk is now potentially about another QE stimulus program. Isn't there a very fundamental support for the housing market from low interest rates going forward, and with interest rates not likely to go up? Isn't there some fundamental support for the market?
That's exactly right, and that's why I'm not expecting a crash. I'm expecting a slowdown, and it's simply because of that. Also, you've got very strong underlying fundamental demand. You've got nearly full employment in Hong Kong. You've also got wages and salaries rising at 6-7%. The government's going to give their staff a 7% pay increase. Good Lord, they're higher paid than the private sector anyway. So you have got a very strong fundamental underlying demand, not to mention re-regulation in America, and Europe is sending private bankers and investment banks here as well. So I think demand is very firm.
Peter, thanks for letting me bring you up here.